Yeah, hey Brad, thanks for having me. It's great to be with you. And yeah, we're celebrating today 10 years since our IPO. It's amazing. It seems like you don't know where the time has gone. But you mentioned it. We've doubled our brand portfolio in that time, nearly doubled the size of the company. We continue to grow rapidly. So the next phase of growth is we're opening more than a hotel a day. We have a development pipeline of nearly 460,000 rooms, more rooms under construction than any other hotel company. And it's really a lot of it's been fueled by our success has been fueled by our culture. Since we were acquired by Blackstone and taken private in 2007, and everything we've done since then has been driven by our team members around the world and our culture. And we were just recently named the #1 great place to work in the world by Great Place to Work and Fortune. So we're really proud of that. And as you mentioned, we're really proud of our returns. So since our IPO 10 years ago, our total shareholder return has been about 330%, which has far outpaced the Dow Jones, the S&P 500, and our peer set.
Yeah, absolutely. I mean, when you talk about that room base that's under construction right now and the capacity that's set to come online of about 460,000 rooms, half of that currently under construction as of the last earnings call, and you discussed that on that call. When you think about the costs that you were anticipating going into starting a lot of these projects, that's kind of moved given the credit conditions and a lot of what for construction a lot of this going forward here. So ultimately, where do you see some of those costs also comparing over a long-term basis?
Yeah, look, construction costs, the raw materials costs have actually moderated a little bit. I mean, they were going up in 2021, 2022, 20 to 30% a year, and those cost increases have moderated. But of course, as you've alluded to, the cost of capital is higher. And so, that's actually causing is a little bit of a constrained environment for development, which helps fundamentals, right? Because if capacity additions are lower, then fundamentals are good. And then for us, with our brands being as strong as they are, we're continuing to take share. So we're getting under construction more than our fair share of projects. And that's because our brands are financeable and our owners think that they're more likely to have success with our brands. So actually year to date through the third quarter, our construction starts are up over 20% globally, 18% in the US. So a lot of our hotel owners are saying, look, I know my construction loan's gonna cost me more, but fundamentals are good. I like the Hilton brands. I'd rather get under construction now and open up into a good fundamental environment in the future, which is really fueling our construction starts, to continue to go up despite an environment that is a little bit more expensive.
Kevin, let's talk a little bit more about that environment just briefly here. I mean, revenge travel, do you believe that's behind us? And if so, is 2024 a year of normalization?
I think in some ways things have normalized. I think it depends on how you characterize it. There's still a lot of pent-up demand for travel from COVID. Obviously, during COVID, people, focused on acquiring goods, because they couldn't move around as much. And now people are focusing more on experiences. And so the recovery has been led by leisure, leisure demand continues to be robust. We expect a really strong holiday season coming up, and we expect leisure travel to continue into next year. And I don't know that you would characterize it as revenge travel, but business travel, which of course everybody wrote off during the pandemic and said it was never going to come back, is now back to just about where it was from a volume perspective and above where it was in 2019 from a revenue perspective. And then meetings and events are coming on strong. So our group position for next year is up almost 20%. And so if you think about people being, a little bit more flexible in their work environment, maybe not in the office as much, people need to meet more. So I don't know that I'd call it revenge, but I think I'd still refer to it as a lot of pent-up demand for travel through COVID. So, our outlook for the environment for next year, even though most people are calling for the economy to slow a little bit, we feel really good about the demand and the overall fundamental setup for our business next year.